Hello everyone, my name is Moji. You're watching a Bitcoin Bubble News channel. When do you think the cycle's high point will be? I believe it tops. In other words, we think it will reach its peak around late 2025. That is, it might be sometime in the second half. Hey crypto fam, nice to see you again. Michael Howell and Powell were talking about when they think the crypto cycle and the financial cycle will end in that clip you just watched. We'll also watch a movie today that shows a recent conversation these two had. This is Michael Howell. In case you don't know who he is, he runs Cross-Border Capital. He started this study and investment firm in 1996. He has been very active in the stock market for a very, very long time. They will also talk about global liquidity and how to spot it in today's clip. What happened with global liquidity in the second quarter? Why did we have to sell off our Bitcoin? And when do they think this liquidity cycle will peak? This could be the same time that Bitcoin peaks. These charts are right here for you. Powell shows these liquidity charts a lot, and Bitcoin is very linked to the liquidity cycle. These charts show that right here. I really think you should watch this video all the way through because it has a lot of important information in it. Check out our Patreon if you want to get more in-depth study and analysis on what's going on in the crypto market. Let's watch this clip. And one way to think about liquidity is that money has an order. So the question is how to understand how that order changes over time. And if you think of it as a pyramid, or maybe an upside-down pyramid, the top of the pyramid is made up of central bank balance sheets, or more specifically, the parts of the balance sheet that create liquidity. It's not just the balance sheet that's important. Then you have to think about what might be able to be borrowed from abroad. So you should think about the euro-dollar markets. They were important maybe 10 years ago, but they may all come back in a different form. To put it another way, those investments made abroad. Then you need to start putting up collateral, which has become very important since the great financial crisis. This top point is like a pyramid that keeps going up. The bottom of the pyramid is private sector cash. And that private sector cash is really based on the upper level or the balance sheet of the central bank and the collateral. There is also a collateral multiplier, also known as a shadow banking multiplier, that really boosts that core money and turns it into credit around the world. This is what we call global liquidity. That's what we usually look at. I'll say it again, I'm on a desert island. I have to pick 2 or 3 things to look at. What are 3 things that are very important? I would say that what the Federal Reserve is doing with its cash flows is number 1. The Fed is no longer the world's most important central bank. But first, you need to look at the People's Bank of China. To understand China's role in the world economy, you need to look at the People's Bank of China. And we know that's the case without having to use the elephant in the room as a metaphor. China is very important to the world economy, and the PBOC has a lot of power over it. A third thing is that you need to really understand how security markets work. And one of the best ways to figure out how collateral affects things is to look at bond volatility measures, such as the MOVE. If you have 3 traffic lights, the Fed, the PBOC, and the MOVE index and the Fed is going, the MOVE index means that the Fed's balance sheet is growing, the PBC is injecting more money into the market, and bond volatility is decreasing. This is a recipe for very strong global liquidity. As you can see, the Fed has been tightening liquidity during the second quarter. As of April 15th, that's just the simple fact that the Treasury General account went up because of tax season. When people had to pay their taxes, the TGA went up, which made us markets less open. And it's just now beginning to come back. As I always tell people, one way to keep an eye on that is to read the Fed H4.1 news release every Thursday at 4:30 p.m. Eastern Time. That will tell you everything you need to know about what's going on with bank reserves and other things. They're probably going to keep going up, but let's wait and see. First place. The People's Bank of China comes in second. What does it do? It has been very worried about the yuan lately. The yuan hasn't been strong. It has been trying to keep it up. A tighter monetary strategy has been in place since the end of the Lunar New Year to try to keep the yuan. Within the past 28 days, it has put 600 billion yuan back into the money markets. This is a very large move by the Chinese. It's possible that either the UN needs to lower its standards a little more, or there's a deal being worked on that, as you said, could lead to easing with either Yemen or the US. It comes from something the guard said about the ECB. I think she said that 2 or 3 days ago that US and ECB policy will not be very different from each other. In fact, I believe she even said rights, not going to stray too far. They're eager to begin lowering rates. Rates will go down, say the Swedes. It was already done by the Swiss. I believe that the current situation is one in which central bankers have already said they will be cutting rates quite sharply over the next few months. I still think there will be a cut, even if the Fed doesn't go all in. It's getting tighter, so I think a cut could happen as early as July. At the moment, I think the US will start to loosen monetary policy. The PBOC also seems to be doing the same, but that's not always the case based on the currency. The move score comes next. As it turns out, Janet is making the bond market less volatile, or more correctly, more liquid. This lowers the volatility of the bond market and raises the collateral multiplier. You now have another possible green light. This means that I think liquidity will stay in place during the second half of the year. Begin to rise faster. I've said in the past that I believe the cash part of the Federal Reserve's balance sheet could be growing at a 20% yearly rate through the second half. I agree that some of that is seasonal, but it could also be that they want the dollar to fall. They have also used the TGA in the past to try to make the dollar less strong. So I think all of that is possible. Then, as I said, keep an eye on China, which is the big problem when it comes to cash. There is a weak economy in China, which we know. There is a very easy chart in the pack that I put together that shows how the price of iron ore has changed since the PBOC injected cash into the market. Now, iron ore is a pretty important good for China's economy. There is a lead time of about 2 or 3 months on Chinese liquidity, which is very close to the link. There will be a change in the world economy if the PBOC injects. All the signs point to the world economy slowing down right now. Not even close to a recession, but things are slowing down. You already know that the best time for risky assets is when the economy is slow and central banks want to speed it up. That's all we have now. When do you think the cycle will reach its highest point? I believe it tops. In other words, our view has been that it peaks around late. That is, it might be sometime in the second half of 2025. And I believe that's a mix of probably 2 or 3 things. One reason is that I still think inflation is very sticky. I'm not a fan of high inflation, but I believe it will stay that way. And I think that might change how the Fed or other central banks think at that time. The second thing is that I think the market will be pretty good by then. We have, in fact, asked ourselves, where are we in the cycle from my point of view? I believe we are still in the early stages of the world economy cycle. How do you feel about that? It's the same as mine. The isms didn't even show up. Yes, we might